Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Wednesday. I'm Juliette Sarli. Great to have your company with us. Let's have a quick look at where the local market has finished the day's trade. Not really going anywhere. Very much a seesaw session. Still looking very closely at what's happening in the Middle East, that fragile truce. But today really just, I guess, a battle between the banks and the miners. So that sell down, particularly in energy prices. Global oil prices down 6% overnight on expectations that the ceasefire between Israel and Iran will reduce the risk of oil supply, weighing in on our energy stocks. Miners also under pressure. And then, of course, we had CBA hitting yet another record high. So let's have a look at the themes of the day. It really was about the banks and the miners, with CBA at $190. Really incredible. This is a stock that 24 hours ago I was talking to Martin Crabb from Shaw & Partners, saying he thought it was a $100 stock. That was when it was around $188. Now it pushed through $190, and of course lifting the overall index, well, at least as much as it could, as we saw very much a flat finish. Then, of course, rate expectations, given that inflation very much seems to be cooling. 2.1%, the core figure for May, the trimmed mean 2.4%, both within the RBA's bandwidth of 2 to 3%. I spoke to Prashant Nunaha from TD Securities straight after the data was released. He's tipping a July and an August rate cut. CBA brought forward their expectations of a July rate cut as well, as did Deutsche Bank, Phil O'Donoghue, who we speak to quite regularly. So it looks like all systems go now for July and a rate cut from the RBA. And then, of course, for better or worse, got to give credit where it's due to Ridimo, one of our producers, for this clever title. And that's as we continue to monitor these goings on between Pointsbet and, of course, the betr bid. Now, this morning it looked like betr had managed to quash, I should say, Mixi, the Japanese company's $402 million bid for Pointsbet, but betr is now telling the ASX, look, its proxy votes weren't counted, so it looks like this is going to get even more messy. You can see Pointsbet shares there, which are in a trading halt, up by about 150% year to date. Let's have a look though at overall sectoral moves, particularly as we saw CBA hit yet another record, and oh my gosh, it's pushed through 191 on the close. I think was Henry Jennings on the call earlier today saying it looks like the market just really wants to push this to a $200 stock potentially by the end of the financial year, but certainly lifting all the banks there. Okay, having a look at the energy players amidst the fall in crude oil today. Not as much of a drop as what you saw yesterday, particularly with Woodside having that big slump, but it was down another 0.4% today. And then when we look at the miners, of course, iron ore coming under pressure, Fortescue in particular, down 2.2%. So we saw what happened with Pointsbet there. Mixi is looking like it has the votes, but then betr saying that, no, hang on, you haven't counted our votes. We also saw betr shares at one point down about 10%, but they've pared their loss to 3.6%. Xero there in a trading halt. It did, though, announce a $3.9 billion deal to acquire payment platform Melio and break into the US markets. Woodside shares there. It's completed a 40% stake in LNG. Droneshield having a great old session. Its largest deal yet, with a $61.6 million military contract in Europe. Now, this deal alone higher than its revenue of $57.5 million last year. And Star Entertainment having a good session as well. Board, they're recommending the approval of new strategic investments, Bally's, to provide cash funding to assist with its operations. Let's delve into the day that was with Mark Gardner now from MPC Markets. Mark, good to see you.
Good afternoon.
So here, when we look at the stocks in particular, we can touch on CB in a moment, but this, energy defence thematic, and you've been talking about that for a while, really pushing Droneshield today.
Yeah, Droneshield, obviously, that I had it on the call actually with Andrew Coleman about a week ago, and we had it as one of the stocks. But they're in the bidding for 1.2 billion in contracts this year. So they've only won about 180 million in contracts ever. 57 million of which is in the last 12 months. So that sort of that gets over the line for their 2024 expectations. But obviously, $61 million contract is pretty huge for these guys. And look, but we actually sold out today. We've had it on in our alpha recommendation service for probably the last few months, and But yeah, it's now getting towards $2 billion market cap. I think that's probably stretching things for a company that's, that's obviously got a forward contract for 60 million and really only has done 57 odd million in the last 12 months. So, but it's certainly one we're going to be keeping an eye on because, if they say they manage to grab another 100 to 200 million in contracts over the next 12 months, that stock could really take off. So yeah, and we're also looking at another one that was on the call today, actually, DTEC in the ETF space. So, which is
Do you like that one?
Don't mind it. It's a little bit more at the punchier end with the growth stocks. So we've for our clients with offshore access, we've already got the likes of Lockheed, Raytheon, etc. But we quite like the Rheinmetall, Leonardo out of Italy, and Thales out of France, and Bay Systems in the UK, which I think is got a little bit of an allocation to. So. Those increases in military spending across the board are going to be very sizable. They sound small, but they're 1% of total GDP growth globally is going to go into defence, and I think this Iran-Israel conflict has really only, sealed that more than anything else. So I think geopolitical issues will be the rise of nationalism because of Trump will be, in the news for some time.
All right, let's get to the banks because I know that you are another one that thinks that CBA has been overvalued for some time. But at what point do we all say, look, maybe we got it wrong? The market is pushing this stock higher.
We just don't. It's nowhere near value. I tend to agree with the Shaw's view that it's probably more $100. So we just look for value elsewhere. I mean, CBA is now more expensive on a forward valuation than any of the Mag 7. I'd just rather own those, to be honest, because we've got... So price earnings to growth ratio is about fair value is about 1. Nvidia is trading about 1.06. CBA is trading 7 times overvalued basically on its forward valuation. So what will end up happening is we'll end up having a recession at some stage, and there probably won't be any real bids from any value funds until that low $100 mark. And you'll just see the lazy Australian industry supers or Australian super funds significantly underperform for a long period of time because where CBA is now is factoring in the next 10 years growth. So it's really not going to go, and it's not going to go to $300, and it's probably not going to go much further.
But can it not just get here and hold there?
It can, but then the rest of the market comes up, so you're missing out on value. So, I mean, we just work off the point. It's a high conviction pick of ours, but we haven't held it for over 6 months. And when it comes back into being undervalued, which things tend to happen over time, where people start looking at the mining stocks when the global economy picks up or China picks up again, and I think you'll see some of that money come out of CBA and into the likes of BHP and Fortescue.
All right. Do you have a thought on this thing that's happening with Pointsbet? It's very confusing.
No, another sector really. I mean, it's such an overcrowded sector. I think there's 170 gambling licenses in Australia. I don't mind Pointsbet. Betfair is obviously not a bad in terms of technology and a platform. We're looking at DraftKings in the US. It's a very good company with a lot of growth prospects as well. And obviously being already in the US, they'd be a little bit more familiar with the regulatory and the growing market over there as gambling markets start to open up, because the states over there, the individual states within the US are struggling badly, as is the federal government for revenue. So they're, I think that you'll see more and more gambling or legalisation of gambling and regulations loosened in the US, and that's a huge, huge market. So so DraftKings is sort of our pick in that space as it stands at the minute.
All right, and just to guess a final word on Xero in that trading halt, but really pushing here into the US, a near $4 billion deal. Yeah,
it looks on the expensive side, but when you look at the synergies, it's a smart deal, I think, overall. It's probably a little bit of frustration from Xero that they're not getting the penetration that they obviously wanted. So they're trying to do it via acquisition. If it had been the old management team pre-2023, I'd be concerned about this deal. I do like the new management that's in there at the moment. And I trust them to be fiscally disciplined. But yeah, based on historical deals in the last sort of 2 or 3 years in this space, it is on the high side, but I think it's a pretty good bolt-on, and they'll probably be, it'll add growth to both by about 2028, I do believe. So I think there'll be some short-term pain for the share price, but it'll probably be a very good buying opportunity. It's just a matter of, if you've got it, you're definitely holding on to it. I think there's a cap raise going on, probably participate in that. For us, again, it's one of our high conviction picks. We'll probably be adding to it on any form of weakness. Because I think it plays out very well on a 2 to 3 year basis.
All right, Mark, always a pleasure. Thank you so much. Mark Gardner from MPC Markets. And speaking of Xero, that was the stock of the day on the call. Andrew spoke to Andrew Weiland from DP Wealth Advisory, Henry Jennings from Marcus Today.
I'm not rushing out to buy this one. It's obviously a strategic fit. They're talking about how good it is. But when you look at, the rally in the stock has been predicated basically on the fact that they hadn't been chucking huge amounts of money at growing US market share. Now they've just chucked $2.5 billion US at growing it in one big gulp. And that comes with risk. So I think for me, it's probably an avoid for the time being and let it settle.
Where they haven't had traction in the past is the US. They had that former head of PayPal for a little while. That didn't quite work out. And so now this is sort of really potentially a company making acquisition for them. But as we also know, with due respect, Australian companies going offshore and doing a great job in the US, it's not exactly a long list of companies that have been able to do it. So in the short term, I agree with Henry, it's a hold simply because that share purchase plan is going to put some pressure on the share price, $176 a share. And you probably want to see how it's going to wash out over the next 6 to 9 months post-acquisition. But if they can get it right, it really could be a company making acquisition. But right here, right now, today, it's a hold.
As we mentioned, a flat day on the market, but let's have a look at some of the leaders on the board, including Light & Wonder having a great session, up by about 10.5%. Paladin also looking solid there. Nick Scali up by 3.4%. Of course, the inflation data leading to thoughts that we will see more rate cuts, which is good for those consumer discretionary stocks like Nick Scali and Light & Wonder. Let's have a look at the laggards today, and it's mainly in the materials space. We certainly saw quite a bit of weakness coming through in the base metals space in London. In terms of some of the small caps today, Yoji up an impressive 18%. Hum, I think I saw what Hum was doing. Let me just see if I'm fastest fingers to work out what that was doing as we continue to look at some of those other small cap players that looked good, including Sonmomed, which was up by about 11.2%. And Hum, the buy now, pay later company, confirming a takeover offer from the family office of Chairman Andrew Abercrombie. All right, let's have a look at the laggards. Andy and Silver, now that was one that Violetta had on her radar when she was talking on the trade earlier, down about 14%. Atlantic Lithium too, Silver Mines coming under pressure as well. Okay, let's have a look at what we're expecting tonight. A continuation of Fed Chair Jerome Powell testifying. Also US new home sales, which are expected to drop by about 6.7%. Tomorrow we've got national accounts, the finance and wealth piece, so all of this feeding into the overall GDP print for the March quarter, the slowest growth in household wealth we're expecting to see since 2022, and job vacancies there for May expecting to be fairly flat. Final look at where the local market is tracking, and let's have a look at where it is. Pretty flat there. As we finish out the overall market, and then of course looking at some of the sectors as well in the overall market, we had weakness coming through in those mining and energy players, but of course CBA really the standout there, hitting that record high again, pushing the overall index higher. CBA now at 191, let me just find its clothing price, $191.14, so up another 1.6% today. So, doesn't matter what the naysayers say, does it? You can't beat that market momentum, and it certainly does look, as Henry Jennings from Marcus Today put it, that perhaps the market or somebody is trying to push that to $200 a stock. All right, join us for our next virtual investor event, the ABCs of derivatives. Did you know derivatives can be used in your SMSF strategy? They can also be used for downside protection, extracting yield, and for leverage. Join our virtual investor event to discover how to achieve upside after learning the ABCs of derivatives. Join us June 26th, that's tomorrow, 1 p.m. Eastern. Registration is free. If you're registered, you can watch live or on demand at ausbiz.co/derivatives. All right, that does it for this edition of the COB. Be sure to join us 9:45 a.m. Eastern tomorrow. We'll see you then.